In 1982, I had nothing. I'd predicted a depression that never came. Lost everything. Had to let go of my employees, some of them friends. I sat in my apartment, humiliated, wondering if I'd ever work in finance again. I'd been so sure, so confident. I went on television and told everyone the crash was coming. I was wrong, spectacularly, publicly, expensively wrong. That moment taught me one rule that changed everything, not just about markets, about life, about reality itself. 30 years later, that single principle had built Bridgewater Associates into the largest hedge fund in the world, $160 billion under management, consistent returns through crashes, bubbles, pandemics. Not because I'm smarter than everyone else, because I learned something most people's egos won't let them accept. Here's the thing. Most people can't follow this rule. They'd rather feel smart than get rich. They'd rather protect their ego than face reality. And that's exactly why they stay broke, while the same principle that saved me from bankruptcy made me billions. Let me tell you what I learned in that apartment in 1982 and why it's the only thing that matters. When I was young, I thought I was a genius. I'd gotten lucky a few times in the markets, made some good calls, built a small firm, started getting invited on television, and I let it go to my head. That's the trap. Early success breeds overconfidence, and overconfidence is the most expensive disease in investing. In 1981, I looked at the data. Debt levels were high. Mexico had defaulted. The economic indicators looked terrible. And I was certain, absolutely certain, that we were heading into a depression. I didn't just think it. I knew it. I went on television and told everyone to get out. I positioned everything I had for the collapse. And then the exact opposite happened. The economy boomed, the market soared. Everything I'd predicted was wrong. And here's what nobody tells you about being wrong in finance. You don't just lose money, you lose clients. You lose reputation, you lose employees. Some of them were friends, people who believed in me, and I had to look them in the eye and tell them I'd failed. Most people in that situation do one of two things. They either blame someone else, the Fed, the government, bad luck, or they double down on their wrong opinion until it destroys them completely. I watched other traders do this my whole career. They'd rather die than admit they were wrong. But I had a choice to make. I could protect my ego and pretend I'd just been early, or I could face the most painful truth of my life. I didn't know as much as I thought I did. The market had just given me an education, and tuition was everything I owned. I chose the education. I realized something in that moment. The market doesn't care about your opinions. Reality doesn't care about your confidence. And if you want to survive, let alone get rich, you need to value truth more than you value being right. That realization changed everything. Here's the rule that made me billions. Truth, or more precisely, an accurate understanding of reality, is the essential foundation for any good outcome. Let me simplify it. Embrace radical truth and radical transparency. Most people hear that and think they understand. They don't. Because living this rule doesn't mean being honest occasionally. It means building your entire life around the systematic pursuit of reality, even when reality is painful, especially when it's painful. Here's what that looks like in practice. It means accepting that your opinion is probably wrong. It means creating systems that expose your mistakes before the market does. It means surrounding yourself with people who will tell you that you're full of it. It means documenting every decision so you can study your own stupidity in high definition. This isn't feel-good self-help nonsense. This is combat-level pragmatism. Because in markets in life, the person who understands reality most accurately wins. Not the smartest person, not the hardest worker. The one who sees things as they are, not as they wish them to be. After 1982, I stopped trying to be right. I started trying to be less wrong. And that shift, that one simple shift, compounded into everything that came after. Let me tell you the first hard truth I learned. Your opinion is probably wrong. Not sometimes, probably, right now, about something important. Here's why. Your brain evolved to protect you, not enlighten you. It's wired for confirmation bias. You see what you expect to see. It's wired for recency bias. You think the recent past predicts the future. It's wired for overconfidence. You think you know more than you do. These aren't bugs, they're features. They kept your ancestors alive on the savannah. But in markets, they'll kill you. After 1982, I started operating on one assumption: I'm missing something. Always. The question isn't whether I'm wrong. The question is, where am I wrong, and how do I find out before it costs me? That led me to the most important formula I've ever discovered. Pain plus reflection equals progress. Every mistake is data if you're willing to be honest about it. 1,982 wasn't a failure. It was the most expensive education I ever bought, and it was worth every penny. But only because I didn't waste it. I started writing down every decision I made and why I made it. Then I tracked the outcomes. This isn't complicated. It's a decision journal. You write down what you believe, why you believe it, and what you expect to happen. Then reality delivers the verdict, and you study the gap between what you thought and what actually occurred. Most people avoid this. They make a decision, it goes badly, and they forget about it. Or they tell themselves a story about why it wasn't really their fault. I did the opposite. I collected my mistakes like specimens. I studied them. I built a library of my own stupidity, and that library became the foundation of everything I built. Here's what I found. When I looked at my bad decisions honestly, patterns emerged. I was overconfident about X. I ignored signals about Y. I let emotions drive Z. And once you see the patterns, you can build principles to counteract them. This is what most people get wrong about learning. They think experience makes you better. It doesn't. Reflected experience makes you better. Most people live 80 years and have 1 year of experience repeated 80 times. I lived 40 years and extracted 40 years of learning because I refused to let pain go to waste. But here's the catch. You can't do this alone. Your brain won't let you. You need other people to show you your blind spots. And that's where most people fail completely, because their ego won't allow it. I stopped asking, what do I think? I started asking, what is true? And the only way to answer that question is to find the smartest people who disagree with you and actually listen to them. That sounds simple. It's not. Your ego fights you every step. It wants you to defend your position. It wants you to win arguments. It wants you to feel smart. But I learned something critical. You can either be right or you can get rich. Most of the time, you can't have both. So I made a choice. I'd rather be rich. Radical truth is internal. Radical transparency is how you build it into a system. At Bridgewater, we do something most companies think is insane. We record almost every meeting, not for legal reasons, for learning. because if you're not capturing your decisions and outcomes, you're flying blind. We built something called the dot collector. In real time, during meetings, people rate each other on dozens of attributes. Is this person logical? Are they open-minded? Are they letting ego drive the conversation? The data gets collected, analyzed, and fed back. It's like Yelp for your thinking. We also created what we call baseball cards for every employee. Public profiles showing their strengths and weaknesses based on real performance data, not feelings, not politics. Just what the evidence shows about how someone actually thinks and decides. Most people hear this and recoil. It sounds dystopian, uncomfortable, even cruel. But here's what they miss. If people are hiding mistakes, you can't learn from them. And if you can't learn, you can't improve. And if you can't improve, you die. Maybe not today, but eventually reality finds you. Transparency creates accountability. It also creates speed. When everyone can see everyone else's thinking, the truth emerges faster. You don't waste months in political games or ego protection. You find out what's true and you move forward. But transparency alone isn't enough. You need what I call thoughtful disagreement. Here's the principle. The best ideas come from conflict between smart people who respect each other. Not polite agreement, not groupthink, conflict. I wanted people who would tell me I'm wrong, not because they're contrarian, because they have a well-reasoned argument backed by evidence. Most organizations punish disagreement. They say they want it, but when someone challenges the boss, they get marginalized. At Bridgewater, we require it. If you're not disagreeing, you're not thinking. And if you're not thinking, you're not useful. We built systems to surface dissent, not suppress it. In meetings, we use something called believability-weighted decision-making. Not everyone's opinion counts the same. If you've been right about this type of question historically, your vote carries more weight. If you've been wrong, less. It's not democratic, it's meritocratic. The best thinking wins, not the loudest voice or the highest rank. Now here's where it compounds. Every time we make a decision, we document it, we turn the outcome into a principle, then we test that principle against future decisions. Over time, you build an operating system not based on one person's genius, but on 40 years of documented trial and error. Eventually, we even started converting principles into algorithms, not to replace human judgment, but to encode it, to make sure we weren't repeating mistakes we'd already learned from. Most people repeat the same errors their entire lives. We built a machine to prevent it. And that machine, built on radical truth and radical transparency, became the competitive advantage that no one could copy. Not because they didn't understand it, but because their egos wouldn't let them live it. Here's where truth-seeking led me into something bigger. After 1982, I stopped trying to predict the future. I started trying to understand how the machine works. And by machine, I mean the economy. It's not mystical, it's not random. It's a machine with parts and patterns, and if you study it honestly, you can see how it operates. I spent years studying debt cycles, not just recent history, 500 years back, and I found something remarkable. They always repeat, not exactly, but close enough, because the machine runs on human nature, and human nature doesn't change. There are three big forces driving everything. First, productivity growth. That's slow and steady. Over time, people figure out how to do more with less. Technology improves, standards of living rise. That's the long-term trend. Second, the short-term debt cycle. This runs about 5 to 8 years. People borrow, spend, economy heats up, central bank raises rates, people can't pay, economy cools, central bank lowers rates, repeat. You've lived through this cycle multiple times. Most people don't notice the pattern. Third, the long-term debt cycle. This takes 50 to 75 years. Debt builds up over generations. Eventually, it can't be paid back with real money, so it gets paid back with printed money. That's inflation. Then there's a reset, the Great Depression, the 2008 crisis. We're watching another one unfold now. When you understand these cycles, you stop being surprised. The 2008 financial crisis wasn't a black swan. It was the long-term debt cycle doing exactly what it always does. I saw it coming not because I'm psychic, but because I studied history honestly. Here's what that meant practically. While everyone else was shocked in 2008, Bridgewater was positioned for it. We didn't just survive. We were up 14% that year while the market crashed. Not luck. Systematic preparation based on historical patterns. Most investors react emotionally. I react mechanistically. The machine tells you what's coming if you're watching the right indicators, debt to GDP ratios, central bank policy, credit spreads. It's all there in the data if you're willing to look. And here's the key. I wasn't smarter than anyone else. I just studied history without ego. I didn't care if the conclusions were popular or comfortable. I cared if they were true. That's the advantage of radical truth. You see what's actually happening instead of what you want to be happening. And in markets, that's the only edge that matters over decades. Now, let me tell you why most people can't do this. The ego barrier is real. Being radically honest about your flaws is painful. It feels like dying a little bit every day. Your ego wants to protect you. It wants you to feel competent, smart, respected. And truth-seeking requires you to constantly admit you're not as smart as you thought. Most people would rather feel smart than get rich. I know that sounds harsh, but I've watched it happen thousands of times. Someone makes a bad investment. Instead of saying, I was wrong, let me figure out why, they say, the market's rigged, or I was early, or just wait, I'll be proven right. That's ego protection, and it's more expensive than any market crash. Radical transparency feels dangerous. What if people see I'm wrong? What if they lose respect for me? What if I look stupid? But here's what I learned. Hiding weakness is more dangerous than exposing it, because hidden weaknesses grow in the dark. Exposed weaknesses get fixed. Bridgewater's culture is famous. Some people call it cult-like. Others call it brutal. We have high turnover because most people can't handle it. They come in thinking they're smart, and our systems immediately show them everywhere they're wrong. Some people learn from that. Most people leave. I'm not saying this to brag. I'm saying it because it's true. Not everyone can separate their ego from their ideas. Most people's opinions are their identity. If you challenge the opinion, they feel like you're attacking them personally. That's fatal in investing. If you can't separate ego from outcome, you'll protect the ego and lose the money. But here's the compound benefit. The people who stayed become exceptional, not because they were born smarter, but because they're learning faster. Every day, mistakes get surfaced, analyzed, and converted into principles. The organization learns faster than competitors. Mistakes become assets, not liabilities. We fail faster, learn faster, and therefore win faster. That's the competitive moat nobody can copy. Not technology, not strategy, culture. a culture where truth matters more than comfort. Andrew Carnegie focused on one thing, steel. He mastered it completely, controlled everything, and dominated. My version was different. I focused on one thing too, truth seeking. I built systems to find reality faster than anyone else. Both of us were obsessive. Both of us were isolated by our obsession. And both of us built empires because discipline beat talent every single time. Let me be clear about what this rule is not. This is not about being brutally honest without empathy. There's a difference between truth-seeking and cruelty. If you're using radical honesty as an excuse to be an asshole, you've missed the point entirely. This is not about transparency without psychological safety. If people are afraid to admit mistakes because they'll be punished, you don't get truth. You get hidden problems that explode later. This is not about admitting mistakes publicly to look humble. That's performance. That's ego in disguise. I'm talking about internal honesty, not external signaling. And this is absolutely not about analysis paralysis. You can study forever and never act. Truth-seeking has to lead to better decisions, not permanent hesitation. Here's what this rule actually is. It's systematic capture of mistakes for learning. Every failure gets documented, analyzed, and converted into a principle, so you don't repeat it. It's creating environments where truth is safer than hiding, where people are rewarded for surfacing problems early, not punished for having them. It's separating ego from outcome. You are not your ideas. Your ideas are tools. When they break, you get better tools. It's testing beliefs against reality constantly. Not once, not when it's convenient, all the time. It's building principles from painful experience, not from theory, not from what sounds good, from what actually worked when tested by reality. Even with all these systems, I still make mistakes. In 2020, when the pandemic started, I initially underestimated the impact. I thought it would be contained regionally. I was wrong. And I said so publicly, adjusted our models, updated the principles. The system works when you follow it honestly, including being honest about the system itself. Let me show you how truth compounds over decades. 1975. Started Bridgewater in my apartment, 2-bedroom place in Manhattan. I was young, smart, and arrogant. I thought I knew everything. 1982. Near bankruptcy. Lost everything. The most painful and important moment of my life. 1991. Created the Pure Alpha strategy, built entirely on systematic truth-seeking. Every decision backed by principles, not opinions. 2000. Bridgewater becomes the world's largest hedge fund, not because we were the smartest, but because we were learning the fastest. 2008. Up 14% during the financial crisis. This was the proof, not luck, not genius. The principles worked because they were based on reality, not hope. 2011 to present, $160 billion under management, industry dominance, but more importantly, 4 decades of documented learning, 40 years of mistakes converted into principles. Here's why. It compounded. Each mistake led to a new principle. Each principle led to better decisions. The better decisions led to better returns. The better returns attracted better people. The better people generated more insights. And the cycle fed itself for 40 years. The systems improved every year, not dramatically, just a little bit better, a little bit smarter, a little bit more refined. But compounded over decades, those small improvements became an unassailable advantage. The culture of truth attracted truth seekers, people who wanted to be right left, people who wanted to get rich stayed. That selection effect meant we kept getting stronger. Clients stayed because the returns were based on reality, not luck. They could see the principles. They could understand the process. It wasn't magic, it was method. Pure Alpha returned about 12% annually for over 30 years, through dot-com crashes, through financial crises, through pandemics. Not because every year was good, but because the losses were small and the recoveries were strong. My personal wealth ended up somewhere around $20 billion. But here's the thing, the money was a byproduct, not the goal. I wanted to understand how reality works. The wealth came from being less wrong, more often, for longer. Money was a scorecard, not the point. The point was always understanding. And understanding, when pursued honestly for 40 years, tends to make you very, very rich. You don't need a hedge fund to use this rule. Start small. Start today. First, create a decision journal. Every time you make an important decision, investment, career move, major purchase, write it down. What do you believe? Why do you believe it? What do you expect to happen? Then, 6 months later, a year later, go back and see what actually happened. Study the gap. That gap is pure learning. Second, build feedback loops. After every project, every quarter, every year, ask one question: what did I miss? Not what went well, what did I miss? Where was I wrong? That question cuts through ego straight to truth. Third, seek thoughtful disagreement. Find the smartest person who disagrees with you and actually listen, not to win the argument, to find the truth. If you can't articulate their position better than they can, you don't understand your own position. Fourth, make mistakes visible, at least to yourself. Stop hiding failures. Every mistake you hide is learning you've wasted. I kept a failure journal for decades. My dumbest decisions documented in painful detail. That journal was worth more than any success. In your work, stop trying to look smart. Start trying to be accurate. There's a difference. Smart is impressive. Accurate is profitable. In investing, stop predicting where the market will go. Start understanding how the machine works. Study debt cycles. Study valuations. Study history. Build rules based on patterns, not feelings. And when the rules fail, update the rules. Here's the test. Ask yourself, am I defending my ego or seeking truth? Would I rather be right or make money? Do I have systems to catch my mistakes before they compound? Am I learning faster than I'm losing? If you can't answer yes to those questions, you're on the wrong path. Truth-seeking made me billions. But the money was never the goal. After building Bridgewater, I spent years writing principles. 800 pages of lessons learned over 40 years. I made it free online initially. Millions of downloads. Because the point wasn't to keep the knowledge. The point was to share what I'd learned. I made How the Economic Machine Works, a 30-minute video explaining everything I'd figured out about debt cycles and economic patterns. 100 million views, free. Because understanding reality shouldn't be a secret. I've put enormous resources into systemic change, education reform, ocean exploration, understanding consciousness. These aren't hobbies. They're the same thing I've always done. Trying to understand how reality works. The full picture looks like this. Radical truth built the wealth, but the goal was always understanding reality itself. I'm an explorer. Markets were just one territory. A very profitable one, but still just one. I made billions by accepting that I knew nothing, and I'm spending those billions trying to understand everything. Here's what I tell young people. 1,982 was the best thing that ever happened to me. If I'd been right about that depression prediction, I'd have stayed arrogant. I'd have thought I was a genius, and eventually reality would have destroyed me anyway, probably worse. Being wrong saved me, but accepting it made me rich. Most people learn from success. Success teaches you that what you did worked, but it doesn't tell you why, and it doesn't prepare you for when conditions change. I learned from failure. Failure is a better teacher because it shows you reality without the filter of ego. Pain plus reflection equals progress. That's not a platitude. That's the formula. Let me leave you with this. You're probably wrong about something important right now, something you're confident about, something you've staked money or reputation on, and your ego is protecting you from seeing it. The question isn't whether you're wrong. The question is, will you find out before the market does? Here's your choice. You can protect your ego and stay comfortable. You can surround yourself with people who agree with you. You can defend your positions and feel smart. And you can stay exactly where you are. Or you can face painful truths. You can build systems that expose your mistakes. You can seek out people who will tell you you're wrong. You can document your failures and study them like a scientist. And you can get rich. Most people choose ego. That's why most people are broke. Not poor in money necessarily, poor in growth, poor in understanding, poor in progress. Being rich isn't about being smart. Every PhD program is full of brilliant people who'll never be wealthy. Being rich is about being honest. Honest with yourself. Honest about reality. Honest about where you're wrong and what you don't know. Let me ask you directly, what belief are you defending right now? What opinion are you protecting? What evidence would prove you wrong? And have you actually looked for that evidence? Or are you only looking for evidence that confirms what you already believe? Do you have systems to catch your mistakes before they compound, or are you just hoping you'll get lucky? Are you learning faster than you're losing, or are you repeating the same errors with different names? In 1982, I lost everything because I thought I knew. In 2025, I have everything because I know I don't. One rule made the difference: truth over ego, reality over comfort, learning over being right. The question is, what do you value more, being right or getting rich? Because you can't have both. Most people choose being right. They die broke, angry, and confused about why the world didn't reward their brilliance. A few people choose truth. They spend decades being wrong publicly, learning constantly, and compounding knowledge. And they end up with everything. I made my choice in 1,982 inches, an apartment with $4,000 borrowed from my father, and nowhere to go but up. What's yours?